How's everybody doing? Welcome back to another episode of The Banker Next Door. I'm your host, Dr. Joe Berquist. Today, I wanted to talk about a topic called the discount window. Specifically, what is the discount window and how do banks get access to it? Why has the discount window become a kind of bigger topic of conversation in more recent months, if you will? Well, I came across one thing here, and it basically said it was an interesting article that was called Fed Shares 5 Steps to Discount Window Borrowing. So basically, what are the 5 steps that banks need to take to basically gain access to the discount window? But before I get to that, I wanted to share with everybody a little bit of history here as to give some context to what is the discount window, kind of what are some of the things that have happened in the past, how do we get to today? So this was coming in from basically from the ICBA, the Independent Community Bankers Association. They basically said community banks need to take formal actions to ensure the discount window access, and bank management needs to understand the mechanics of discount window borrowing, even if there is no immediate need for liquidity, according to the Federal Reserve. In this new blog post, the Fed shares 5 steps institutions need to take in order to be ready should they need contingent funding. Now, there's a couple of things here. So, and we're going to get into this in a second in a little bit more detail. So, primarily, or I should say historically, the main banks that have borrowed from the Federal Reserve discount window have been what are called the money center banks, or perhaps prime banks, if you will. And it was basically the 24, 25 largest banks in the country by asset size. And those were the ones that primarily borrowed from the Fed discount window. And there's very good reason for that I'll get into here in just a moment when I begin just, kind of breaking down this whole process. But there has also been kind of a stigma to the Fed discount window. There's been a very good reason why a lot of banks, particularly smaller banks, have not bothered to utilize the discount window in the past, because typically banks that borrow from the Fed discount window, that usually means you have a major problem. If you're coming to the Fed and you're going to the discount window, remember the Fed is the lender of what? Last resort. And so a lot of people have had the opinion over the years, because typically when banks have gone to borrow from the Fed discount window, it's been in times of great need or great crisis. So therefore, the lender of last resort has to step in and bail you out. So that's why there's always been this kind of stigma around the discount window, if you will, for many, many banks around the country, and why they will not touch it, because it is kind of this preconceived notion that if you're going to the Fed and you're borrowing from the Fed discount window, there must be something very wrong with the bank, and you might even be in danger of failure, and that's why you're kind of showing up there. So that being said, and just in case anybody's wondering, so if you're a smaller bank, say you're like $1 billion bank or whatever, typically if those banks need a line of credit, they're going to go to their local Federal Home Loan Bank, and they will basically pledge collateral, which is basically their loans. So they will pledge the collateral, the assets that they have, which is their loans, and they will pledge that to the Federal Home Loan Bank. The Federal Home Loan Bank will then provide a line of credit to the bank, and that has typically been one of the sources of liquidity for thousands and thousands of banks around the country. But like I said, the money center banks or the prime banks have generally been the ones that have accessed the Fed discount window. So let's take a look at a couple different things here. So, real quick here. So before we get into that, I want to go into this. So I just got this article from just the last couple of days, and this is the 50 largest U.S. banks by total assets as of the second quarter of 2022. So we can take a quick rundown here, and let's just take a look at, we're not going to go through all 50, but I just wanted to show you the top 20, 25 banks so you could understand what banks we're talking about here. So obviously the big four at the top: JP Morgan, Bank of America, Citigroup, Wells Fargo. And then we've got Goldman Sachs and Morgan Stanley. You could technically call those the big six. They all have $1 trillion balance sheets. Obviously the smallest one being Morgan Stanley at 1.2 trillion. The largest one, JP Morgan, now having over 4 trillion in assets, which is just a staggering number. But then you get a little bit of a fall off after that. You get number 7 is US Bank Corp at 680 million. Capital One at 630, PNC Financial at 556, and then TD Group, and basically rounding out the top 10 at 523 billion in assets. And it just kind of inches down a little bit from there, and again, a lot of these banks then beginning to fall into kind of your larger regional banks. And we get all the way down to bank number 25 right now, Barclays US LLC, Huntington's Bank shares. But just below them at 26 and 27, you see Ally Financial at 192 billion in assets, Key Corp 187 billion in assets, RBC 167 billion, Santander 167 billion, and that kind of just about rounds out the top 30 banks. So now we have a little bit of context here. So here's the banks that we're talking about when we're talking about the money center or prime banks. So now let's look at a money center bank. What is their meaning, their overview? What is their role in the economy? So a money center bank is similar in structure to a standard bank. However, its borrowing and lending activities are with the governments, large corporations, and regular banks. In other words, meaning that banks borrow from them. It's what's called like the commercial paper market. These type of financial institutions or designated branches of these institutions generally do not borrow from or lend to consumers. So some of the key takeaways here. So a money center bank is similar in structure to a standard bank. However, again, its borrowing and lending activities are with governments, large corporations, and regular banks. For examples of large money center banks in the U.S. would be Bank of America, Citigroup, JP Morgan, Wells Fargo, among others. Most money center banks raise funds from domestic and international money marks, as opposed to relying on depositors like traditional banks. Money center banks are usually located in major economic centers such as London, Hong Kong, Tokyo, and New York. With their large balance sheets, these banks are involved in national and international financial systems. And then here's what happened during the financial crisis. So, for examples of large money center banks in the United States, including, again, Bank of America, Citibank, JP Morgan, Wells Fargo, among others, during the 2008 financial crisis, these banks struggled financially. So the U.S. Federal Reserve stepped in 3 phases of quantitative easing and bought back mortgages. So basically what happened was the discount window kind of got opened up in a certain respect a little bit more in 2008. Traditionally, like I said, it had just been these money center banks going to the discount window at the Federal Reserve, borrowing money. But then the Federal Reserve basically in 2008 was like, okay, we're opening this thing up to anybody and everybody that wants to come in, and you just got to follow a couple steps to get access to it. So, but I wanted to give everybody a little bit more understanding, just a little bit of context as to like the big banks in the country. Why do we consider them money center banks? And now, why is it they borrow from the Federal Reserve? So, and it's because they are dealing with governments, the largest, corporations in the country. And it's also because they also lend to other, they might be lending to 100 other smaller banks. So now we get into what is a discount window and why and how do banks use it. So the discount window is a central bank lending facility meant to help commercial banks manage short-term liquidity needs. Banks that are unable to borrow from other banks in the federal funds markets may borrow directly from the central bank's discount window, paying the federal discount rate. So the discount window, again, it's a central bank facility that offers commercial banks very short-term loans, often overnight. The Federal Reserve extends discount window loans to financial institutions that in turn support commercial industries. The discount window rate is higher than the federal funds target rate, which encourages banks to borrow and lend to each other and only turn to the central bank when necessary. And therein lies the key, which encourages banks to borrow and lend to each other. So that's called the commercial paper market. And in 2008, you had what was called a seizing of liquidity in the market, meaning that banks would not lend to other banks. Your major money center banks, like your Bank of America, basically said, "Oh, okay, those 1,000 banks that we lend to across the country? Yeah, we're not lending to them anymore. They're too risky. We're not going to do it. And plus, we have to kind of CYA, And so that's when the Fed basically stepped in and said, okay, if you guys won't lend, then we'll just open up the discount window to everybody. Everybody can come directly to us and borrow right from the discount window if you need to. And so that's kind of how a lot of this stuff unfolded. And again, let's go. So, how a discount window works. The Federal Reserve and other central banks maintain discount windows, referring to the loans they make at an administered discount rate to commercial banks and other deposit-taking firms. Discount window borrowings tend to be short-term, generally overnight, and collateralized. These loans are different from the uncollateralized lending banks with deposits at central banks. In the U.S., such loans are made at the federal funds rate. In other words, right now, federal funds rate is at 5.5%. Which is lower than the discount rate. Even foreign banks may borrow from the Federal Reserve's discount window. Banks borrow at the discount window when they are experiencing short-term liquidity shortfalls and need a quick cash infusion. Banks generally prefer to borrow from other banks since the rate is cheaper and the loans do not require collateral. So, and this is just kind of a side note here. It says the term discount window refers to the now obsolete practice of sending bank employees to actual physical windows in the Federal Reserve branch lobbies to ask for loans. So if you were wondering how it got the name discount window, there you go. For this reason, discount window borrowings tend to rise during spells of economic-wide distress when all banks are experiencing some degree of liquidity pressure. Borrowing from the central bank is a substitute for borrowing from other commercial banks, and so it is seen as a lender of last resort measure once the interbank overnight lending system has been maxed out. Example of a discount window, the 2008 financial crisis saw the Fed's discount window take on a central role in maintaining a semblance of financial stability. Lending periods were extended from overnight to 30 days, then 90 days. The rate was cut to within basically 25 basis points or 0.25 percentage points of the federal funds rate. The SPED had previously been 1 percentage point. And then it gets into kind of special considerations, federal discount rate versus the federal funds rate. Here's an interesting one. How does the discount window affect the money supply? So the discount rate can have an effect on money supply. So if the Federal Reserve lowers the discount rate, this makes it cheaper for banks to borrow money. This can effectively increase liquidity. Conversely, at higher discount rates, it's less profitable for banks to borrow money. This can lead to a decline or a tightening in money in the banking system. And that's pretty much it for right there. So now you have like what the discount window is. So now that we know that, discount windows open to all banks, they can go in and borrow. Like I said, however, there is a stigma there. But if a bank wants to go there, what steps do they have to take? And that's what brings us to the article here today. So this is from Community Banking Connections, part of Federal Reserve System. And this was basically a blog post that they put out there called 5 Steps to Discount Window Borrowing. So, and it just says in here, the Federal Reserve discount window is a critical tool for banks to manage liquidity risk, as well as a source of liquidity to the U.S. financial system. During times of stress, such as rapid deposit outflows or increased loan demand, certain borrowing lines can become unavailable. But the discount window remains a convenient and ready contingent source to meet the unexpected funding needs of banks. Nevertheless, a bank needs to make some formal actions to fully ensure discount window access, and bank management needs to understand the mechanics of discount window borrowing, even if there is no immediate need for liquidity. Additionally, the Federal Reserve continues to implement enhancements to discount window services. One enhancement is the new Discount Window Direct, or DWD, online portal application, which offers additional convenience for establishing and managing funding arrangements. Is your institution ready if it needs contingent funding? So what are the 5 steps? So complete and update legal documents. Number 2 would be establish collateral arrangements. So the discount window accepts a wide variety of securities and loans for collateral. Therefore, bank management should discuss questions about collateral eligibility with their local Federal Reserve Bank contacts. Eligible security types include U.S. Treasury securities and fully guaranteed agency securities, investment grade private label mortgage-backed securities, or MBS, and municipal and corporate bonds. Certain other types of securities less commonly owned by banks are also eligible. Securities can be pledged as quickly as the same day through the Fedwire Security Service or the Depository Trust Company, the DTC. Once a bank completes the necessary documents and setup steps, additionally, a variety of loan types are accepted as collateral and eligible for the Borrow in Custody BIC program. Loans must be what's called pass rated and current. And then it goes into kind of like the following documents are the following documents that would be needed. Number 3 would be understand and document the mechanics of borrowing. So it is important for banks to thoroughly document the internal operational procedures required to borrow from the discount window, along with the specific steps needed to request in advance. Step number 4 is test the borrowing process. And then step number 5 is access discount window direct and other online resources. So there you basically have the 5 steps. So basically you need to complete an update, make sure all your legal documents are in order. You need to establish the collateral, which can either be securities on a bank's balance sheet or the loans on the bank's balance sheet. Understand and document the mechanics of borrowing. Test the borrowing process, so do in advance and then pay it back, and then obviously use the tools for accessing the discount window, such as their online portal and so on and so forth. So, so a lot of interesting things there, and I think the question there then gets back to what? So why now? Like why all of a sudden is the regulators and the Federal Reserve saying that banks should at least make sure that they're set up at the discount window so that if something happens, they can go and borrow? It's a very interesting question, and I think you get a lot of interesting answers right now on that. There appears to be some level of concern, I would say, from the Federal Reserve that maybe something might be coming down the pike, and they're worried and they want to make sure that banks have access to liquidity and capital. There's also been a lot of pressure put on the Federal Home Loan Bank. There's being a lot of, the FHFA is looking to make a lot of changes. Could that potentially cause some banks to not be able to access their lines at the Federal Home Loan Bank in the future? Maybe. As of right now, that's not an issue, but could that come down the road if changes are made to the Federal Home Loan banking system? Possibly. But again, I think for whatever the reason might be, the Federal Reserve wants to make sure that banks have access, like I said, to a number of different funding sources, whether it would be, just traditional deposits, brokered deposits, lines of credits, securities that can be liquidated rather quickly, and then obviously, access to the discount window, should anything happen and they need a kind of an emergency source of funds, or if they're just trying to manage their month in, month out liquidity situation and cash flow of the particular financial institution. So, but anyway, like I said, I thought this was an interesting topic. I thought that, talking about this kind of whole dynamic between the discount window, your money center banks, the Federal Reserve, and just how a lot of this dynamic works and how we kind of came to be at this particular moment. So, there you go. I hope people will maybe find this interesting and maybe potentially have some questions about it, or get into, or maybe want to get to know a little bit more about how this kind of stuff works, how money flows throughout the economy, and this is one of the way it can flow. This is one of the Fed's toolbox, if you will, for either increasing or decreasing liquidity in the financial system. So. But I will wrap up with this. If you like this episode, please make sure to like, share, and subscribe, as that always helps the channel. Please remember we are on YouTube, Rumble, and all major podcast platforms. Please leave your comments down below, and please check out some of the other episodes that I have out on the channel. I have a lot of great stuff there. And as always, keep an eye out for the weekly live stream. So with that, have a great week, everybody, and I will see you again soon. Thanks a lot.